Thank you, Tom. Thank you for your leadership. And John, thank you for your leadership and exciting remarks about the opportunity for Boston in the 2024 Summer Olympics. It's very exciting times here. Well, we have another great turnout for our annual overview, and this looks like it might be the best ever. Many clients, friends of the firm, and real estate professionals are here again this year, and we thank you very much for joining us. The Boston market had its best year since 2000, and we will highlight the fundamentals that have contributed to this success. Tom mentioned the theme of innovation, which has clearly been a major contributing factor. As we focus on Boston, we believe the talent in the job market is the key, the ability of companies to attract and retain the best people. Let's take a closer look at the evolving story in the Boston marketplace. Today's Boston, the oldest, youngest city. This may surprise you. As they say in Boston, we're wicked old and we're wicked young. But it's the youthful piece that's changing the dynamic in Boston. Today, almost half of the resident workforce in Boston is made up of millennials, and they are having a significant impact on their employers' decisions to locate in the city. They are young and talented, socially aware, settle down a bit later in life, and like living and working in the city. Let's take a look at the key headlines. Firms like Sonos, CDM, Acquia, WeWork Labs, and Cambridge Innovation Center are moving into the city to attract and retain this talent. Domestic and foreign capital is investing. The seaport is buzzing, and the financial district has been the beneficiary of these moves. Key migration, investment capital, the seaport, and the resurgence of the financial district are major headlines for the past year. The Oxford J.P. Morgan purchase of several Class A assets from Equity Office for over $2 billion stands out on the list. As companies investigate their options, the lines are blurring between the markets. You may or may not recognize this song. I didn't at first, and I was told it's blurred lines. I know the millennials in here know that. If you're my age, you might have been a little puzzled. I thought you'd enjoy it. Companies have tended to play musical chairs in their markets, moving from one location to another, and that's still the case today. But more than ever, firms are looking much more broadly to brand themselves and put themselves in the best recruiting position, quite often in the city. Over 700,000 square feet, or 15% of 2014's velocity or signed leases have been from companies relocating from the suburbs or Cambridge, a trend we see continuing. The same blurring of lines is also happening within the city, and there seem to be no boundaries. Carbonite and Safari are good examples of moves from the Back Bay and Seaport into the downtown crossing section of the city. We see this continuing with the financial district attracting companies like these with larger space options. We tracked over 5 million square feet of transactions in Boston in 2014 with an average size of 20,000 square feet, which is a typical floor in a tower. About 2/3 of these firms are from traditional companies and supported by creative and technology firms on the list. Financial service industry names like State Street and Natixis are still there, but they're complemented by technology firms like Sonos. The financial district was the winner with larger blocks of space and very good values, particularly in the lower-rise sections of towers. 5 of these companies on the screen are renewing and 5 are relocating, which is a good balance. The tenants in the market is also strong, in excess of 4 million square feet, with a mixture of tenants. The largest are traditional firms such as BNY Mellon, Putnam, Wells Fargo, and the Globe, accounting for 1/3 of the overall total, but you now see a variety of creative and technology companies from Boston, Cambridge, and the suburbs investigating their options. The talent is driving this, recruitment and retention. The traditional companies are looking for efficient space, leasing similar or even less square footage, while the creative firms are growing and driving options for flexibility. This demand is creating new development opportunities in Boston. 8 million square feet either approved or in the pipeline. New developments are underway. PwC at 101 Seaport and Goodwin Procter at 100 Northern Ave in the Seaport, and Natixis at 888 Boylston in the Back Bay. Skanska has plans to break ground at 121 Seaport Boulevard mid-year, potentially on a speculative basis, and Pier 4, now owned by Tishman, plans to do the same in the fall. Samuels is under construction at 1325 Boylston near Fenway Park, and Boston Properties is advancing its mixed-use project at North Station, while a number of other projects are actively talking with tenants as well as investors. Let's review the current tower office market. We analyzed 40 towers with 30 million square feet as a gauge for vacancy and rents. I have to admit, this is the first time we've illustrated this with cupcakes, but you get the idea, tops and bottoms. The tops of the towers above the 20th floor remain very tight with low single-digit vacancies, and the bottoms have gotten tighter with single-digit vacancies as well. The financial district's overall vacancy was in the high teens just a few years ago, so the figures you see here show a significant drop. To frame the rents in Boston, Class A tower rents range from $40 to $80 per square foot, from very low-rise floors to the tops of buildings, which is a huge range, which follows the tower vacancies we just showed you. The high-rise rents are in the $55 to $75 per square foot range, while low-rise rents are in the $45 to $55 per square foot area. Class B rents are drafting off the low-rises of the towers and in some cases commanding even higher rents. The brick and beam space in the Seaport, for example, is leasing space in the 40s per square foot in a number of buildings. Doug Jacoby will talk shortly about the sale activity in the market, which is putting even more upward pressure on rents going forward. So to give you the key figure to measure the strength of the Boston market, here it is. A 63 million square foot market, we look at net absorption, which is the change in occupied space or growth. This was 1.77 million square feet this past year, the best figure in 15 years. Net absorption has been positive for 14 of the past 15 quarters and 16 of the past 18, leading this strong and steady recovery. The financial district led the way this past year, accounting for approximately 50% of this total, and the Seaport was also a major contributor as Vertex and State Street moved into their new buildings. The overall vacancy rate declined to its lowest level in 6 years, ending the year at 10.9% overall, and we think of equilibrium when we are in the 10% range. As we look ahead, we see a continuing healthy market at more moderate net absorption levels. We see the trend line heading to single-digit vacancy over the next 12 to 18 months and continuing for the next few years with vacancy in the 8 to 9% range. So in closing, we look for the following. We think the financial district will continue to be the unsung hero, drawing companies with good values, infrastructure in place, and improving amenities. The big blocks that companies like Price Waterhouse, Goodwin Procter, and State Street are vacating, we think will be leased to attractive firms that are migrating to the city as well as moving within the city. Speculative development, which we haven't talked about in some time, will most likely occur in the Seaport District this year, where an exciting new city is forming within Boston. We see continued upward pressure on rents due to the improving fundamentals, which I just discussed, as well as the sale activity, which you're going to hear more about. It's been really robust this past year. And landlords will be adapting their properties to appeal to both traditional and evolving new creative firms. Boston Properties at John Hancock Tower's transformation of low-rise floors into tech-friendly space with a private lobby is a good example of this, and there are many others. Attracting and retaining talent is the key, the briefcase versus the backpack. Not too long ago, I bought a backpack and I referred to it as a knapsack. And my kids tell me, Dad, that's just not cool. But that's the phenomenon that's taking place here today, and it's creating a terrific blend with the traditional and technology firms. So hopefully these slides have given you a very tight, concise look at the Boston market, a look at where we are and where we believe we are going. And next, I'd like to introduce my partner, Joe Flaherty, to provide an overview of the Cambridge office market and biotech market, which is very dynamic at this time. Joe?